So whether it's Tesla or Bitcoin, our next guest has made a name for herself betting on big innovations. Cathie Wood, CEO and CIO at ARK Invest, which has now $11 billion in assets under management, joins us. Great to have you back.
Great to be here, Jen.
So ARK is famous, really, for this bullish call on Tesla. We have talked about it before.
Yes.
I mean, you have done a podcast with Elon Musk. You guys have been in the stock for a long time.
Yes.
What was this week like for you? I mean, were you just like running around your house really excited? Or were you befuddled? What did you think of the action?
Oh, no. We have been waiting for this. I think probably China, meaning before coronavirus, China really got analysts' imaginations going. You know, wow, they got a plant up and running and producing cars in 1 year. China's going to be the biggest market. Maybe this notion, our notion of 37 million electric vehicle sales in 5 years, up from 2 million last year, maybe there's something to that. And I think people are beginning to understand Tesla's in the lead and that other auto manufacturers are in trouble. So I think they're putting two and two together and really examining, why is Tesla in the lead? How could this be? All these other auto manufacturers, they have capital budgets and R&D budgets that run circles around Teslas, and so this cannot be. Well, it is. They have the best battery technology. They have the best artificial intelligence chip for autonomous. They have the most real-world miles driven data, which means that they'll probably win in the autonomous space. And they still are the only auto manufacturer with over-the-air software updates that can change performance. My Model 3 is better today than it was when I bought it in September of 18. And more people are buying these cars.
And when you look at those pillars of the Tesla case, and we've talked about this a number of times in the past, which one to you, and it sounds like right now it's about China, but which one to you is the most important for the company over the long term? When you think about the way that ARK has argued the stock or the company would evolve over the next 10, 15 years, is it the AI? Is it the self-driving cars? Is there a part of that thesis that's most important in your bigger picture for the company?
Well, there are two. So one is the battery technology. Their costs are 3 years ahead in terms of cost declines of any other auto manufacturer. So that means that most other auto manufacturers, if they want to compete with Tesla, will have to sell their electric vehicles at a loss while they are losing their internal combustion engine businesses. So the battery technology, and they're going to have Battery Day in April. And we think they're going to tell us a lot more about Maxwell Technologies, which they bought and which they have really not said very much about. So that's probably another advancement that will push them even further ahead. And then the second variable is artificial intelligence, which is how they get to full self-driving cars. And their chip, if you think about Tesla and think about Apple, there's a very important analogy there. Apple designed its own chip for the smartphone market because Nokia, Motorola, and Ericsson were just not moving fast enough, and they had the vision. Well, guess who's taking all of the profits, really, the bulk of the profits out? The same thing's going to happen here. Tesla is moving this market ahead so much faster than the other auto manufacturers that it will take them 3 years to catch up to where Tesla's AI chip is right now. Right? And then Tesla will be that much further ahead.
And then just in terms of the stock, I mean, obviously it's been kind of a crazy last couple of months. As a long-term investor, a large holder of the stock, when you see these kinds of moves, does it make you reevaluate, or are you just like, well, we expect there's this happening and there's probably going to be a lot more episodes of this kind of volatility and this kind of, I guess you could say, awakening from a lot of investors kind of all at once?
So we have a 5-year time horizon, and we do, in our kind of stock, experience a lot of volatility, and we use that volatility to our advantage, trading around it. So we believe that the stock, our base case in 5 years, will be at $7,000. Okay, so that's almost a tenfold increase. Our bear case is that it is not successful in autonomous, and loses share in the electric vehicle market. That bear case gets us to $1,500 in 5 years, which is roughly a doubling from where we are today. That's our minimum hurdle rate of return, doubling over 5 years, which is a 15% compound annual rate of return. That's what we think they will deliver. Now, we cannot, in many of our portfolios, hold more than 10% in any one. So we have been taking, and you would expect that. You know, we were buying it when it was in the 180s, 170s last April, May. And so when it's in the 900s, you'd expect us to be taking profits. Otherwise, we'd have a stock at nearly 25% of our portfolios.
Yeah, flipping it to the Robin Hood.
That's right. Yes.
But I want to ask you about the solar business, because some people have said that's kind of an albatross around their neck. There was controversy around the acquisition. What's your forecast for that part of the business? Is it viable? Is it critical to Tesla? What if it fails for some reason? Does it matter?
So in the numbers I just gave you, we don't include solar. That doesn't mean we don't think it works. We just think the electric vehicle opportunity is so large that we'll spend most of our time and research doing that. And that's probably where they'll allocate most of their battery power anyway, if they want to scale and go autonomous, which is where the real margins are going to be. We think their solar roofs are viable, and this is a smart strategy. Instead of going door to door and cold calling to install solar panels, they're basically going to builders and saying, let us work with you, build out a solar roof, and the financing will not be consumer installment debt, which is also very difficult to get, but it will be part of the purchase price of the home. So we actually think it's smart and viable, and that it will be a good business. But the real story here is electric and autonomous vehicles, and most importantly, the autonomous taxi platform that we believe Tesla will build out during the next 5 years.
Earlier, you were talking about the China business before coronavirus. And I'm just curious, because you do have such a long time horizon. You're making big bets on innovations you think are coming the next generation. Does something like coronavirus come up at ARK Invest? Do you guys even think about it or discuss it? Or is that just such a short-term thing that it doesn't need to go into your modeling?
It doesn't need to go into our modeling. We think they will get it under control. It's all hands on deck there to do that, right? So no, we don't. However, I will say that my experience has been whenever times get really tough, innovation gains even more traction than it might have before. You know, better, cheaper, faster, more productive, better for the environment, especially in China. So I think President Xi will want to change the subject back to let's clean up our environment. And so we actually think this is going to be a good time for Tesla.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.